Good morning. The Bank of Canada left interest rates unchanged this morning. It's the sixth consecutive meeting they've done so. Really not a surprise. Not a lot has changed on the jobs front. Inflation's still running hot at 3.2%. Growth for 2026 is expected to come in well under 1%. So that stagflationary setup we talked about last month is continuing to build. Really, the only change on the interest rate front, that one rate hike that was being expected by the end of this year has now been pushed out to January, with another hike expected to come at some point in mid-2027. The peace situation in Iran is continuing to erode. We'll see how that impacts the rate forecast for this year. Here's the thing, though. Whatever the Bank of Canada does with interest rates, rate itself is generally not where the real savings are with mortgages. And I'm going to highlight a quick client situation we worked through this last month. Had a client buying a rental pre-sale. They own their own home. They had a small mortgage left on it, and their plan was to use their savings for the 20% down payment required on the rental purchase. So what we show them is, instead of taking their savings, using it for the rental purchase, use their savings, pay off their primary mortgage. Be mortgage-free on their house. Their house has no tax benefits. It's a non-tax deductible mortgage. But the rental purchase mortgage is tax deductible. And there's a specific way to structure things where we actually drew out the down payment from their primary home, used it for the rental purchase, and effectively increased their tax write-off from 80% of the rental purchase to 100% of the rental purchase. And they got to pay off their primary mortgage. So they're saving on income tax, they're mortgage-free on their home, all without really changing their overall debt load. These are situations I love to work through. If you own rental properties, if you're thinking about buying a rental, book in a call with me to talk about this today.